Hello YouTube and welcome back to another DTG Productions video. As you can see today from our stock image of the stock market as the background and the fact that I'm not playing a game, this is going to be a financial video. But not really, because I'm not a financial advisor and this should in no way be taken as professional financial advice. Basically, I just wanted to touch in on the whole Gamestop, Robinhood, stock market, all this sort of stuff. If you're on the internet, and you have been for the last couple weeks, you probably heard about this. I just wanted to touch on it as of February 1st, 2021. If you're not aware, the situation is simply put as follows. There's a group of day trading investors on Reddit, on the our Wall Street Bets subreddit, who took interest in the fact that GameStop is one of the most heavily shorted businesses for a while. A lot of people have been short selling it. And basically short selling is betting against a company. It means that you think the stock price is going to fall, so you borrow shares and sell them, and then at a later date, return them, buy them back at a much lower price, hopefully for the person selling it short, and then return that stock, usually also with some sort of a fee. So, in simple terms, let's say the stock is at $60 per share, and you think it's going to fall down to $10 or $20 a share, or even less. Best case scenario, down to $0 a share, total loss, company goes out of business, everything. Hypothetically, you can sell the stocks, however many you borrow, at $60 a share. Then, in 2 months, you can buy them back at $5 a share, or whatever the price is, and let's say your fee was $10 so you per share. So you give the stock back to the person you borrowed it from, you give them their fee of $10, so your total loss or your expense there is $15 a share, you walk away with $45 a share profit. Short selling in a nutshell. It's basically, like I said, in simple terms, it's a bet that the company's price is too high and it's going to fall. So that's what's been going on with GameStop. And it makes sense because GameStop is a failing business. It probably won't be around in 5 years. So it makes sense that people did this. But that's not how it turned out this time. I mean, mind you, I would say that any reasonable investor or person who's aware of how business works would know that GameStop's price will fall eventually. It doesn't matter what goes on here, it's going to fall because it's a failing business. This is an artificially high price. Best case scenario, this stock resets slowly, people sell off slowly, and it levels off to $45-ish a share because that's where it was at before it fell to the all-time low that it was at in March of 2020. That being said, if everyone that currently has shares in it holds the line, as it were, that's why that phrase has been used so much, just keeps their shares, it can stay high indefinitely, hypothetically, as more people buy in. Now, basically, the main reason I wanted to make this was to discuss that topic, buying into GameStop right now. I wouldn't, because I believe it's somewhere right around the $195-ish range right now, which is, like I said, artificially high. It's 3 or 4 times the price that it would probably be at if GameStop was as healthy as it was this time last year, which it's not. They've been closing stores and losing money all over the place. All-time high for this price that we've seen, for the stock so far that we've seen, was about $400 a share, and that was very briefly last Thursday. Hypothetically, people could have sold for a profit of about 2,000% if they had bought when the price was down at 20 or below, if they had sold it for that over $400 a share on Thursday. So that's an insane amount of money, and some people did make a lot of money on this stock. Some people invested a couple $1,000s when it was at 20 or less a share and sold it at that $347 to $400 a share that it hit for a little bit late last week. Those people made hundreds of thousands of dollars. But there are some people out there that still have quite a bit that they still could make because, as like I said, I believe it's somewhere between the $175 to $200 right now. So, that being said, the plan for these people is to hold the line because there's another motive. So you have two motives in this situation. You have making money, which, like I said, people either have already gotten out if they want that, or they plan to early this week while they can still make their money. And then you've got hurting short sellers, the hedge funds that sold all these. So basically, the longer these people do it, the more likely it is that the short sellers are going to have to they're going to have to lock in their loss and accept that they're going to have to now pay $200 a share for this stuff that they sold for, I don't know, I can't remember exactly what the stock price was at. And I obviously don't know when they started their contract with these people to borrow their stocks, but it was likely less than $20 a share. So that would be a bad thing for them. You're talking billions of dollars in loss. So Sucks to be them, I guess, but I won't weep because, you know, who cares? They're going to lose a house out of their 7 or maybe one of their yachts. Hard for me to get real invested in that. So I've just been basically laughing at the whole situation as I don't have any of these stocks. Considered it. I remember seeing it 2 weeks ago and thinking, that might be worth it, but you know, that ship has sailed. So that's basically the message I would have here is unless your only goal is to help artificially drive up the stock so that you hurt hedge fund managers, or these hedge funds in general, then I would not buy into GameStop anymore at this point, because you're almost guaranteed to lose all that money. Because if you're buying in now at almost $200 a share, it's very, very unlikely that it's going to go back up above that. And if it does, it will only be momentarily. So hypothetically, let's say you treated this as a dip and you bought in for $195 a share today. You bought a whole bunch. And then you do see it go back up to $400 a share. I would sell. You know, that's just me, because then you'd still be turning a profit and you wouldn't just lose everything. But in general, I would treat this as it's most likely going to fall from here. I know that may sound pessimistic, but if it's about making money, now's not the time to invest in GameStop. If it's about holding the line and all that stuff, then yeah, sure, you can do that if you want. And if enough people out there have enough money and they want to do that, then the stock will continue to rise. Like I said, this is not financial advice. I'm not a financial advisor. Just my 2 cents there. Few other things to touch on. I wouldn't use Robinhood anymore. What they did last week by locking people out of being able to buy these stocks, sometimes entirely, but most times limiting down to 1 or just a few stocks on these, I wouldn't use them. They clearly didn't have their users' best interests in mind, and I would stop using Robinhood. They were protecting the hedge funds. They don't care that they don't want you to make money. That should be a clear indication here. All I know is that I wouldn't use a brokerage app that prevented me from buying stocks where I could have made money. Like I said, I don't use Robinhood. I use Fidelity when I do any sort of stocks, which I don't do often, but I would not use Robinhood anymore because that was very anti-consumer, and it's a good indication of what they are likely to do in the future. So I would exit Robinhood and use something else. So there's that. And then there's also the stock of AMC, BlackBerry, Bed Bath & Beyond, and Nokia. Those stocks are similar. They were being short sold quite a bit, most likely for the same reasons, brick and mortar institutions that just don't perform very well in this market. If I was going to pick one of these, again, not a financial advisor, I would probably pick Nokia because it makes the most sense that one is going to have healthy growth. I know a lot of people are choosing AMC because they actually want to protect it as a theater chain. I mean, it's probably the most altruistic out of the goals that you could have in this situation. But if I was going to pick one of those stocks for making money, and again, not a financial advisor, I would probably pick Nokia. I think it's very likely that stock is going to surpass $20 per share probably soon. And if everybody exits GameStop by the end of this week, they will have sufficiently damaged the hedge funds, in my opinion, and most likely turn to profit if they bought in on the cheap. And then they can take that money and invest it in Nokia and have the same turnaround. That would be best case scenario for all of the day trader Reddit investors, in my opinion. But like I said, not a financial advisor, don't have any skin in the game, don't own any of these stocks. So I'm mostly just watching the whole situation with interest. And it gave me an excuse to try out a new recording style. And I've got my green screen up, as you may be able to tell, from my awesome stock market background. But that's where I'm going to leave it for today. Very, very interesting. I hope nobody loses a bunch of money, and I hope nobody overextended themselves on this because this stock price is going to fall. Probably quickly early this week. So, we'll see. Thanks for watching. Thanks for watching another Dare to Game video. If you like this video, please leave a like and a comment. If you haven't already, be sure to subscribe to the channel. If you like my content and would like to support this channel, consider becoming a member today for as little as $1.99 a month. It makes a huge difference. But in any case, thanks for watching and have a nice day. I'll see you next time.